Financial freedom is the top priority for most people, and the most effective way to achieve it is obviously through investing. But for most people, investing seems quite complicated. It's considered to be something that what super smart people do in the Wall Street. But in reality, it's little simpler than you might think. In fact, there are certain patterns that if you understand and follow, you will most likely make a good investment. And that's why in this video, we'll find out when is the right time to invest. Because the reason why many people lose money through investing is simply because they're investing in the wrong period of time. But to find that out, we have to understand how the economy works in the first place. Technically, the economy is a little complicated, but in general, it follows the same cycle over and over, and that's mostly because of debt. Let's imagine an economy without debt. I mean the credit cards as well. The harder you work, the more money you make, therefore, the more you can spend, which is what drives the economy. Since every dollar that is spent is someone's income, the more money people spend, the higher the income rises, and the faster the economy grows. Simple, right? Not really, because it gets complicated when debt comes into the picture. Yes, it includes those credit cards as well. Debt allows people to borrow money from their future self by spending more money now but less later in the future because they have to pay back that debt, and that creates an economic cycle. When people spend more and more money, prices rise, and that causes inflation, which is not really good for the economy. So the government tries to fix it by increasing the interest rates. The cost of borrowing money becomes too expensive and less people start borrowing. And with less money, spending goes down, and that drives the prices down. Houses, stocks, goods become instantly cheaper. When people realize that their investments are losing value, they rush to sell them, which lowers their price even more, and that's known as a recession. And that's also not very good for the economy. So the government tries to fix it again by lowering the interest rates. And when it's cheap to borrow money, more and more people start borrowing and spending goes up, which means that the prices start rising again. And when they start rising too fast, the same process repeats. So the economy is basically a cycle that continuously repeats itself. If you're an investor, logically the best time to invest is when there is a recession, and then sell your investments when the economy has recovered. And that's what separates good investor from the bad one. Most people don't really understand how the economy works. So when the times are good, when the economy is booming, prices are going up fast, that's when most people feel good about investing. So they invest. But in few years, the economy crashes again and the prices start falling. People start panicking and start selling their investments before the prices decrease even more, since they are driven by their emotions. While rich people do the absolute opposite. They look at it as a golden opportunity to make lots of more money, because even the good businesses are sold for a fraction of their price. That's when they start investing, and once the economy has recovered, these companies will worth much more. While it sounds pretty simple in theory, but it's really difficult in practice, so you have to make your best predictions based on the circumstances around. In fact, it's really difficult to predict in which phase of the economic cycle we are. We are still recovering, or we have reached the peak already, for example. But at least we can make some close predictions if we understand the system well. And the last advice is, ignore the media. News channels makes the crisis seem even more dramatic, as if the whole economy is about to collapse. And if you don't sell your investments now, that will be the end of the world. The economy has crashed multiple times, and yet it has recovered every single time, and it has grown even more since then. Don't give up yourself to fear and panic, but rather understand and learn how the system works. And of course, it's way much more complicated than what I have explained in this video, so you have to do your own research and study it by yourself before you actually start investing. Anyways, if you have enjoyed this video, make sure you hit that like button, and if you want to see more similar videos, then hit the subscribe button. Thanks for watching, and I will see you in the next one.